Heavy is the head that has to manage all of this.
Hey everyone, welcome back to my channel.
We're now incentivized to buy what we already buy.
Fumbling through college had me building.
I also got some done on the other side.
And that was right around, I would say, May, maybe, right before renewing the lease for this property.
Welcome to the channel, Martha.
Thank you for having me here.
Oh, I was going to say, I am getting up there and names, I'll tell you what.
Bills paid by other people, life was never this good. I had to step back, knowing that it's...
Hey everyone, welcome back to my channel. So today we're going to talk about stock market, the stock market for beginners. And before we get started, I do want to say that 90% of people who watch this channel have not yet subscribed to the channel. And I would so appreciate it if you did. We're almost at 1,000 subscribers, and I'm super excited about that. And I can't absolutely wait till we reach that milestone together. So Money Team Investors, this one is for you. How to learn the stock market trading for beginners. The key word here is trading. And that's exactly how I started in the stock market. I was actually a trader. I was a day trader. I was a swing trader, and we'll get into what those terms mean as well. So a day trader simply means someone who has a stock today. Let's see an example. Michael Kors. Michael Kors is in the stock market, right? And Michael Kors is trading. Let's see what Michael Kors is trading at, shall we? All right, let's see what Michael Kors... I'm not even sure if they have a stock, but let's find out. Michael Kors is trading at $34.61 US today, as of the making of this video. When you check, it might be different, okay? Now, this is actually down 0.92%. And it's actually down for the 5-year by 11.23%, down on the 1 year by 11.55%. So right now, not looking so good for Michael Kors. With that being said, if I bought Michael Kors, I know that it's down on the day, is down on the 5-day, is down on the month. I would then look at any news that came out that may have affected the decision on Michael Kors. If there was no news and it's simply just going down in value, this might be an opportunity to put a put option on it. Now, I do not advocate for options trading at all, because that is a big risk. It involves you simply essentially speculating or betting that something will go up or down. Now, you can do multiple call and put options, but again, I'm not going to get into that today. So what a day trader would do with Michael Kors at $34.61 is, if I buy that today, I notice that in a day, Michael Kors was up to $34.74. And at the high today, it was $34.86. So there's a potential that it can at least go back up to its high of $34.86 on the day, which would give me about a 25-cent return. So if I put $1,000 into Michael Kors at $34.61, I would have tens of shares, right? I would have a couple of shares, something close to like 40 to 60 shares. And with that 40 to 60 shares, should it go back up 25 cents, I would make tens of dollars that day, right? I would expect that the return on investment just on that day would be well over 10% just because of a 25-cent increase. So you guys do the math. Actually, let's do the math together. I'm not even going to leave it up to you guys. You know, I was just being lazy, but let's see. $1,000 divided by 34.61 That's 28 shares. Let's just put 28 shares. 0.25 times 28 is $7. Okay. So $7 in a day, 7 divided by 1,000 is less than 1% return. Let's see. 1,000 shares. Okay, so in that example, $1,000 into Michael Kors would gain you about $7 in a day. With that example of a 25-cent increase. Now, is that a great investment? Absolutely not. Now, if you make $7 a day for 5 days, because the stock market is open Monday through Friday, that's $35. That $35 divided by $1,000 is 0.35%. So just a little under 4% for the week. Now, this is not a good investment, and it was just an example of what day trading is. So when I was day trading several different companies, and I was using Robinhood as the platform to do so. And these companies were a lot bigger, a lot more volatile, and they would do $2 to $4 swings in a day. Those companies that I'm speaking of are your Facebooks, it's your Netflix, it's your Apple. Those are the type of companies that I really would day trade on a daily basis. And so if you see a company that swings $5, $6 a day, when you put your investment of $1,000 in it, and it's already down and you know it's going to go up a little bit, maybe not today, but tomorrow, then that is a more lucrative investment. Because if you can make $7 off of 25 cents, what can you do off of $5? You know, a $5 increase in a day. So just doing those type of multiples, you can make hundreds of dollars in a day, right? And so let's just do the math on that. 5 times 28. In the same example, considering it's the same price, that's $140 divided by 1,000. That's 14%. Let's do 140 times 5. Is 700 divided by 1,000 is 70%. So in a week, let's say if you had an increase of $5 per day over a week, which is not likely unless you're using multiple companies and not just one company. Because yes, you might be able to get a $5 increase on a Facebook, on a Netflix, on a Tesla, or on a Amazon or Google in a day, but it is not likely that you're going to do it for 5 days consecutively, right? So what I would do, I would look for that downward trend, and then I would invest in. I would wait for it to go down, invest in. Or I might wait for it to go down 2 days in a row and then invest in, because now it's due for a good day. Things like that. Those are the type of strategies that I focused on. Again, looking at the news, looking at the market, looking at everything that I can do in my power to assess the company and ensure that I'm making the right play. So that was day trading. Swing trading is when you're waiting more than a day before you trade the company. And so that may look like, okay, I invested on a down day, but it went down for 2 more days. And then it finally went up, and it did more than what I bought in at. So because I did not invest and sell the very next day, it is now a swing trade in which I waited an additional day or more prior to trading the stock. Now, One thing that I do want to preface here is that when you sell a stock in less than a year for a profit, that is a capital gains, which means it comes with capital gains taxes. Now, there are several strategies and tax loopholes that we can get into in order to negate some of these taxes, but that is not for this video. I just want you to know that if you're not a long-term investor, if you're more of a trader, you will be dealing with capital gains tax. And this tax is something that will eat into the profits that you've made. So not only have you taken additional risk by buying into a company in very short notice and trying to capitalize off of it being down or even up, you're now taking more risk because you have to give away more money in taxes versus if you had held the company for a year, you could have made potentially more money and not have to pay the capital gains tax. Now, if you like this video, if you want to know more about trading itself, long-term investing, capital gains tax, or dividend investing, let me know in the comment section down below, and I'd be more than happy to go over that with you. 90% of people have not yet subscribed to the channel, so I'm asking that you do subscribe, as we're almost at 1,000 subscribers. I'm super excited about that. I'm super excited to have you all with me throughout this journey, and I can't wait to see you on the next one.